If you're a real estate agent earning $200,000 a year and you want to grow your passive income, this show is for you. Learn secrets other agents use and hear from experts in our field who will guide you on your journey to investing in assets like apartment communities so you can take your commissions and turn them into cash flow. Here's your host, Randall. Let's dive in.
Hey, welcome back. I have a great conversation today with Jordan Silvester. He is a real estate investor and a real estate agent in the Ontario, Canada area. I love chatting with him because he's down to earth. He is a guy that you can sit and have a beer with, talk to, watch a game with, do something like that. And he has his branding and everything set up like that on his website. If you go to his website, you'll see what I'm talking about. He's like, I am who I am. You're going to get what you're going to get. I love it. So we have a good conversation. We talk about brokerage and what he's doing on the brokerage side of the business. He's building a social media presence right now, and he's just launched it. So we talk about how he's working on that, and I try to drill down with some very specifics on what he's doing to convert. And then we talk into the investing side and how he was building his single family investing, what happened recently with the deals that he's been working on, and then now he's transitioning into larger properties that are more commercial loan based rather than single family loan based. And we talk about the specifics as to why he's doing that. So I had a great time chatting with him. I hope you enjoy the conversation. If you're getting value out of the show, please go on, rate and review wherever you listen to this, Spotify or Apple Podcasts. It really helps us out a ton to get great guests on the show, to bring you great content. And without further ado, let's jump in, talk to Jordan. Here we go. Jordan, it's awesome to have you on the show. Thanks for joining me today. We were just talking just now about the fact that you're in real estate on the broker side of the business, and you're also an investor. So obviously speaks to me because that's exactly how I am and what we do. And a lot of what we're trying to help current real estate professionals with is how to grow their active income through brokerage business and translate that and those commissions into passive income. So why don't we start on the brokerage side of the business, talk about one, where you're located. I know you're in Canada.
Yep.
And like your price point and what you guys are focused on the brokerage side of the business. And then we'll talk brokerage for a minute and then we'll get into investing.
Sounds good. Thanks, Randall, so much for having me. Yeah. So on the brokerage side of the business, so my dad started in this business in 88. So then one of the things I wasn't very good at is lead generation. So of course that is the entire business. But when you start working with your dad, you have this great benefit of a massive business he's built for 20 years. You're stepping into support. And I built my own investment business kind of within his world. He was primarily more on helping people buy and sell homes, like moving up and doing all those portions where I really like the numbers side of the game. And so I dealt with a lot of the investors and built my business from there. So on the brokerage side back then, that was one of the things was for a long time, I could just lean on the benefit of my dad's business. And then you come across the assets that are investor style, different things, different opportunities that exist within that market, right? Because people, of course, first-time home buyers, they buy primarily investment level property. So when they're selling that, of course, then they're buying their next move up house, which a lot of times isn't something an investor is going to buy. So I worked a lot in that early part there. Since my dad's more retired now, and I've had to fend more for myself. And it's not that these people wouldn't work with me. They did a lot throughout the years with my dad. It's just not the same as him not being there. And so with that, I've had to reinvent myself a bit, which is I've actually gone on social media. I'm doing podcasts. I've become more of a social personality up and until basically September. I had zero social media presence anywhere. And since September, I've been on 5 platforms, basically posting something almost every day. I think YouTube's the only one we're not hitting daily. And so it's really interesting, which is the lead generation side. So the lead gen hinge is, okay, so again, where and what are people doing? How do you want to get involved in the information? So if you're a new realtor and you're looking to get in, the benefit of a lot of online stuff is you can do it alone. I have a guy who's posting stuff and doing that for me because, again, I'm relatively incompetent to some extent when it comes to using all the different platforms. I've always watched them, so I've always seen them and commented here and there and done stuff. But the more I'm engaging it, the more you use the AI and the technology around it. We're finding that AI added to the website was a massive thing. We've already got 3 leads from it. We've had it for 30 days. Whereas the social media stuff, we were generating everyone towards the webpage, but nobody was really communicating. Now we have something communicating with them. And now we're starting to see some of that work out. So I don't have call it the game plan completely worked out. But from a lead gen source, when I look at buying leads off the internet, these are 3 people who are all seeming to want to buy or purchase a home or lease a property in my local area, which is the other big thing. Because when you're on social media, the thing is I could draw leads in from the States. I can draw leads in from wherever, because if people are reaching towards me, because I'm giving advice generally, like real estate on the function in between Canada and the US is massively different. We operate differently under the surface. But as far as the housing goes, the renovations go, all of the buying, the emotions, all of those things are fairly consistent no matter where you live in the world as far as buying and selling real estate. It's just the function that's different. When I look at the business side, where I'm looking to lead generate has been social. And so that's again podcast day with you, Randall. It's a great opportunity just to chit chat about what you're up to. I've got one of my buddies. The biggest thing we're doing currently is I'm switching out of equity, so flipping into cap rate and looking more at how do we have to buy bigger buildings, more units, but now we're just pushing rent and creating more value than having to necessarily do comparison to try to drive value, because the market's fairly stable where we are. We have an average sale price rate around 570 here. Again, you have to remember, so your dollar goes about $1.35 in Canada. So if you put them side by side, it's not as egregious as it might sound to some of the listeners when they're like, oh my goodness, that's insane. But at the same time, with that, I generally, most of the properties I'm dealing with that are single family, and as far as the investment goes, are basically 250 and 350.
Is that a loony or a toonie, or is that
Yeah.
is what?
Yeah, that's why it's funny. So 250. So you're thinking that would be what, a buck 80 American probably.
Yeah. Okay. Still earn your money though in
Yeah.
Canadian dollars, so it's
Well,
still.
that's it. Yeah, it all works itself out. What I'm again. Sometimes when I'm on them, that people I've chatted with, they're like, "Oh my goodness!" I'm like, "But you have to remember, the American dollar is a dollar. Like for me to buy an American dollar, it's $1.35. So when you're looking at them more apples to apples, when you're leveraging and doing things with the numbers, there's some similarities that fall in, even though the prices are generally a little bit higher in Canada than you're going to find in the States. But that's because, again, inflationary reality is our dollar is worth less than yours, right? If you go to Mexico and you want to buy real estate using a peso, right? How many pesos are you going to pay versus how many American dollars? And most people in most of the world spend an American in a lot of other countries. If you look to buy property in other places outside of even the US, a lot of them will put it in USD because it's a more common knowledge, right?
Yeah. All right, you touched on a lot there. Let's jump back for a second. First, the social post. Like, I love, again, I reading about you, and just like your website, everything that you've done, your branding is set up like, hey, this is me. I'm this guy. You're going to get me. So I can tell already through the conversation. I love it. So on the social front, I'm the same. Like I'm not out posting all the time. Like I had to have somebody helping me with that, just because candidly, it's not something that I really love to do or enjoy doing. But what I'm curious about, if there are other people like me that aren't always constantly on social media, and what are you doing to convert leads that come through that funnel, right? And are you actually doing ads, or is it all organic? Because they're two very different things. Yeah. So touch on that a bit and let me know.
Yeah. So when it comes to ads, we've done some ad runs. We've not done much though, like literally under a few, maybe $500 maximum spend so far on ad runs since January. And what we found was the AI bot that we bought, which really only cost us, I think it was about $600 or $700 for the year. So it's, again, you buy it for the year. We bought the thing right up front. That has generated more traction because what I realized is social media operates a lot like a billboard. So it's great. Like people see you, they know you, and anyone who does already know you and trust you sees you more. So you stay more top of mind. But I was like, okay, but how do I get the communication back? And there are options, which I have my mom, who's one of my assistants, and I have another assistant, and they're on Facebook. So my mom's sharing posts. So if you're sharing my posts, we're going onto your website, we're sharing stuff back and forth, we're commenting, we're engaging and trying to do that. Because again, I'll engage to some level within Facebook and do different things. But a lot of it, I say to people now, I said, if you're getting a happy birthday from me, odds are it's my mom posting on my behalf, because she's in there doing that every day, following up. And just what it is this constant drip on people, right? It's a constant touch program to reach out. And all you're basically saying is hello, right? It's just hello. I don't even say half the time that I'm a realtor. Now, my videos, of course, are generally real estate. If you come to my website, it's real. But a lot of what we're doing is it's just reminding people that I exist and saying hello. And then people think about you. Most people in my world know me as the realtor. And if you don't know me, and I'm on Facebook or something, and if you were to go to my page, though, then the streams of the videos and things are there. If you're on TikTok, Instagram, LinkedIn, those are the ones we primarily do. And the reason why I'm not on Twitter, so the only reason I'm not on Twitter is that's a high level response thing that is required by me generally to speak. Because I was talking with my media guy about Twitter, and he goes, the only thing is people want to talk to you. So if you're going to go on Twitter and you're going to use that source, that's more of a call response source versus these other ones, which are more people watch them. They're more entertainment in their value than Twitter, which is more interactional.
Yeah.
And so
that's
again,
a great point by itself. That's a great point. Yeah.
So again, I have a person who's in my world who really understands the social side. He's the one who convinced me. I've been talking with my coach for years about doing social media because I just know it's a good way to reach out, give information, educate, do all the things I really love to do in person, but I can do it to the masses by doing that. So we actually batch create. So whenever I can do about 40 to 50 videos in about an hour and a half to 2 hours with my guy. So we come up with a list of things. He just basically asks a question. I respond to the question while he's filming, and then he just cuts it all up and he batch creates everything, and then he posts everything.
Yeah.
So when you see a video today that's out there, so if you're to go and look at my most recent video, I don't know what video that is. I won't know the video either. I got to go watch it and watch my own stuff just to
Yeah.
keep up with what's going on. I know I've said it, so that's good. At least it's me speaking. A lot of times I don't know exactly what's going out, which is also a benefit because if I had to edit everything and critique everything, how much gets by me, right? How much am I really going to let the world see? When it's automated like this, I get to allow it just to do its own thing and create that. I would say to anybody, it's not cheap to, of course, have a person do it for you. But if you have the money and you're going to use that as a lead gen source, and then you're going to try to draw from it. Right now, we're working on the draw, right? We're working on the model of, okay, so what if we use Facebook ads? Do we get the real estate leads? And so we are predominantly not doing investor leads right now. We're doing more education, real estate education around the function of sale of real estate because it's the more practical way to make money in our current market environment. So buying and holding is the only, like, you want to cash flow a property and hold on to it for 10 years. That's a good strategy. But if you want to flip a property in my current market, it's not that you can't do it. It's really hard to find the margin where there's enough value between the closing costs, the sales cost, like this, the resale cost, the carrying cost, the work cost, and then you're making this small amount. And because the market's stagnated, you're not getting any benefit of the push. In the old market, the benefit was if I closed on it here by 3 or 4 months down the road, I'm turning it back around. It might have already risen by 6, 7, 8, 10% by itself. Basically, that's not there. So there's a lot less security in the increase. You're actually more likely to see it decrease than you are to see it increase, like in a sense of
Yeah.
flow, right? Your risk tolerance, the risk sale levels. So there's a lot of things we're taking into consideration on that side. So I've refocused into real estate because it's transactional. It's something, again, we don't have the same level of transactions either, right? We lost about 30% of our market. We went from 732 down to basically 500. We've bounced back up to about 560, 570. When the O2 thing happened, you guys had your interest rates go up. The benefit for you guys is if you're locked in, you're locked in. If for us, we may have a year, 2, 3 maximum. Usually for most people is 5 years before we have to deal with the new interest rate on our loans that we now have. So we got a payment on 2%. Now we're going to have a payment on 6%. That's a pretty drastic adjustment within a few years because my income's probably not going to go up by the adjustment.
Yeah. Yeah.
So those are all
That's
things
interesting.
that we're looking at and why our market is much more active. I've talked to a few people. I'm with KW. So when we were at one of our big conferences, they were saying that most of the transactions happening in the US right now are divorce because unless you have to move, you're probably not breaking your mortgage rate.
Yeah.
Right. And so there's a huge position where it's stagnated more in the US. The prices haven't really come down, but it's an inventory issue where nobody really wants to sell and there's just a stagnation. Whereas here, there's more transaction because of the reality of our 5-year turnaround. People are looking at going, was the market going to crash again? What's going to happen? Like when these renewals come in and they've got 2%, 2.5% mortgages and they're going to 5 or 5.5%, what are those people going to do? So there's a lot of education I'm looking into going around that, which allows me to build seminars, build education, build these things. So I would say whatever market you're in, really know what the beat of the market is, build an education platform around what most people, as my broker owner would say, hey, what keeps them up at night? Don't worry about what you think, but what do you think the average person's concerned with? And it's how am I going to stay in my home? How am I going to afford my groceries? How am I going to provide for my family? These are the questions that keep the average person up at night. So why don't we go try to answer those questions, go find a way to support them through those lines. So on the social side, we're really starting to shift into the whys. Why should we do this? Why should we act now? Why should we have somebody come out 2 years before my mortgage is going to renew? I said, because you might want to have a plan in place depending on if you're going to stay, build another unit in the property, you have options if you start early.
For sure.
If you call me and you've got 3 weeks, we have fewer options than if you have 9 months or a year and a half or something to do something.
Yeah. Yeah. That's interesting. Hadn't thought about the difference in the actual debt markets up there and how, it's more like a commercial loan type market for the residential side. When
Correct.
you compare it to the States, it's like a 5 or 7 year term on some commercial. Okay. What are you guys doing to convert a lead? You put a video out. Are you sitting there interacting, saying, hey, thanks for liking my video. What brought you into my world? Are you sitting there doing that? Do you have somebody doing that? Like, how are you converting somebody from a social media platform into a person in your sphere that stays with you? Or have you even gotten to that point yet?
So that would be the thing. We're right on the edge of that. So we haven't been communicating with every single person. My mom, what she does is, in Facebook is our primary one. So we are not doing it. We're posting on LinkedIn, we're posting on Insta, and TikTok's the only one to bring me an external lead from another human. But once we added the AI piece, like I mentioned earlier, to the website, because everything does funnel back to the website. Everything that's out there, if you click on these things, they're all going to drive you towards my website, which now has the AI bot Madison. who pops up and now is asking a question, whereas before it was just a static page,
Yeah.
right? And so she pops up and says, hey, why are you here? And
Mm-hmm.
people are responding, and then it sends me the transcript. So what we're starting to see is that. And so what we're doing though with my mom, and we're trying to figure the game out. If there is somebody out there who knows exactly like the right process and how they're doing it, that'd be great. What we're doing is we're generally, like I said, if you like our post, share our post, do things, we're watching that. And then we're commenting, responding, and we're going to your page and we're doing stuff with you. We're interacting. Now, that's not me personally. That's my mom. That's my mom's doing that for an hour or two a day. She'll jump on, look at what's going on, and then she'll funnel that out. We also have the command system in the background. So people who are engaging, we're adding them into our command system. So into the database, the CRM. From
Yeah.
there, then we can start to drip on them. So we are putting people. So that what's really funny is there's a lot of people I'm Facebook friends with that I've never transacted with as clients. And so we're working to draw as much of that information in so that we can build the database, keep adding to the bigger part, right? The big funnel at the top, so that as we start to communicate more, now we can be more direct in our communication, direct email, direct text. We use Twilio to text mass groups. We're doing that for different events that are coming up. If we're running, a seminar, we can reach out to our whole database. We can do it via text. We can do it via email and then text response. And today, what's really funny is making an error. So whenever we use Twilio, because it's not my personal phone number, it's using a different phone number, usually just put my name in it. My assistant forgot to, and so she sent it out. So today, and it's not to like it happened before. So this is the second time. And the last time it was my mom, this time it was Shauna, which is fine. But what's really funny is now we get a bunch of response of people saying, who is this? What's this? And everyone's responding because they're just asking a question back. So now we're communicating with all these extra people. So I said to her, I said,
Found a secret.
maybe we should make more error. Like if I misspell something, the odds that somebody will correct me go way up. So that means they're about to communicate with me. So we haven't engaged the look dumb so people communicate with you yet, but I think that might be a very active way to create a conversation where you're like, yeah, we realize we made the mistake, blah, blah, blah. But now you're talking to this person and you're adding them in. And because you're not saying, you're admitting to the mistake, you're creating humility. It's minor enough that nobody's going to be like, I wouldn't work with you as a realtor because of this thing. You got to find the balance between that. But when you're looking at it, it's okay. So how do I get what I'm doing and what I'm generating to start to speak back to me? How do I get them to engage? And so we're looking at the why questions, answering a lot of the why questions, and then giving them the resources to reach back out. And then the other one, of course, is the errors.
Yeah.
So we're probably gonna be testing that Q2, which is where we are right now. We're working through some of that. We've got finished Q1 and all of what we were designed there. We're about 3 weeks behind getting that finished. So we finished that. We're in the podcast creation right now. We're building the studio. We're going to be doing more stuff on the why Windsor, why Tecumseh. These are some of the areas. Why university rental, why multi-unit, why, right? So if you Google and you're like, why would I do this? Here I show up and here's the whys of why you would do the following, right?
Yeah.
For each and every different region and area, and then you'll see different snippets of it. So that's the next big play. And like I said, right now we're more in the warm-up stage. And from 5 posts in 2 years on Facebook to a post every day, we've done 250 videos, I think, now that have been posted to Facebook since September. We're warmed up. And so now now the engine's moving. And so now we're just trying to, of course, hone in, verify what's working, what's not, the catch and balance. So we do not have that 100% worked out. We're in process, but I do know that what's really interesting is the number of people that when I'm out and about, and random people that have now seen me, like I'll be at Tim Hortons, which is like your Dunkin' Donuts up here. I'll be at Tim Hortons, or I'll be at the bar hanging out watching a game, and people will start to recognize me. And some of them I've known in the past, or I haven't seen in a long time, but because I'm all over the place now, I'm on all these platforms, people are starting to recognize me. It's creating that reciprocity. It's just not transacting into a bunch of real estate deals yet, because again, somebody has to be actively in the process of wanting to do that. Usually seeing a video, it's not like you're buying shoes for a few $100s and I'm trying to sell you shoes. I'm trying to help you buy or sell your largest asset most of the time. And unless I can convince you that's a great idea in the moment, but it's bringing value to them so that if they are considering it, I'm one of the first calls they make. If you're going to do a renovation on your home, call me first. I'll just come by and let you know. You don't even need to be moving at all. Just if you're going to do it before you spend the money, have me come out, because I'd rather have you add value than take away value. Because somebody's knocked down this wall and I'm going to make this room bigger. I'm like, but you're changing your home. So if you do have plans to sell in the next 2 to 3 years, I wouldn't do this. But if you're going to keep living it for 10, then go ahead, because you can always put the wall back after, right? What's the plan? What's the long-term outlook? And so trying to shift more into the financial advisor role as a realtor and out of the transactional role.
Yeah.
So that would be part of it. Is all education. It's a model underneath. And so there's a piece there for me. It's okay. So I want to be in your home telling you that you could put a unit in, you could rent to a student, you can sell it. And you'd be like, as the realtor, you should just go and tell them they should sell it because that's the only way generally you make money. It's transactional. But if I go and just help everybody, then they're going to want to help me. And so I
Yeah.
look at it from that side of the coin. So it's not as altruistic. It's not like, I'm just going to help. No, I recognize that by leading with what's best for the client, which I've always done in my career anyway, and then maximizing that potential as I continue to move forward, saying, I'm not in the business of actually trying to sell your home. I'm just trying to see if that's the most practical decision to make in your current circumstance for what you're trying to accomplish with you and your family and your dreams.
Yeah. Yeah.
So,
It's like the go-giver mentality, and the money will come. The money will come if you're doing the right thing. So one thing I heard you say that if you're going to live in it for 10 years, you can, and then you can put the wall back. Is there some regulation with the housing there where you can't demo a wall?
No. My theory is if you're going to spend let's say to do what you're about to do, because you're reflooring, you're doing all this stuff. If you're not getting utility out of it, you might bring contractors in and you're going to spend $3,000 or $4,000, but then you're going to sell it and like you're doing it. And then you're thinking, I'm going to sell it in 2 years. Do you want to spend $4,000 for your comfort? Because that's all you're doing. Because you want to put the wall back, which means you're going to spend another amount of money to undo what you've just did. But if you're going to live in the house for 10 years, yes, then I would say the fourth, it doesn't matter because by the time you get to that point, the cost and everything will be well worth the usage, right? You've used it better for your family. But for most families, a third bedroom is much more valuable than a large master bedroom with only one other bedroom, right?
Yeah.
So
Okay. Yeah.
there are certain things when I'm talking to people that they want to do in renovations that you want to, like every second bath is very important. Every third one depends on where it is. If it's an ensuite, sure. If it's not, then a lot of times you're going to spend a bunch of money to put this other bath in. And you're like, so I'm going to spend 15 grand to put another bathroom in. Well, you already have two. Most of the market is acceptable with two, depending on the house you're in. I'm going to qualify. Like we're dealing in the line of what is the most saleable home with the maximum value? Where do you find the best value adds? And where don't you? A second bath is one of the best value adds. A third bedroom is one of your best value adds up here. So for us, whenever people are going to take a 3-bedroom house and make it a 2, I think that's detrimental. Or if you're going to get rid of a bathroom, I would tell you renovate that. Don't do that. Keep the bathroom and make sure that even if you put the laundry in the bathroom with it, make sure you still have a toilet and a sink, right? Just at least have a half bath. Because that's what the average buyer is looking for. And the buyers are the ones we want to attract when we go to sell, whenever that is.
Yeah. Okay. That makes sense. I just didn't like down here. We'll take a wall out just so your kitchen is opened up or something like that. So yeah, the situation obviously dictates that. You said another thing. So the AI bot, I really want to know what that is for one, but when you're on social, you're putting things out, people are responding. Are you collecting their data from those platforms, or is it only when they come to your website and they start interacting with the bot?
So I think right now we are only using the bot to scrape at the moment. My mom is, so people who are highly interactive with us, she is reaching out to them directly, messenger.
Yeah.
And doing some of that direct, okay, hey, we see you seem to really like us. We don't have you in our system. Would you like to be a part of our thing? And we're drawing people in. That system we're working through because we use Zapier. We use some things that are collecting data. On the website, when we first launched the website just in January. So the website's only been up since January. And we added the AI bot literally like the second week of March. I think it's only been there for 3 or 4 weeks. So again, that's a brand new add to the website because what I want to really do is actually upgrade that to be a version of me, but in digital form. So when you actually show up on the website, I show up as an avatar, basically, not like a cartoon. And then what's really cool is I want the cartoon to be capable of educating. So it's like a persona, right?
Yeah.
And so with AI technology that exists, there is a way. And so we're working with the current AI people. They're building the bot and we have some adaptability with the bot. So we're able to tell it things about our area and it's learning and growing, right? So anything else, it's not going to be able to answer every question today, but as we modify it and grow it, it's learning about the area, learning about the website, learning about these things, and it's getting smarter. How that's happening, above my pay grade. That's why I have people, right? And whether or not this will be the long-term solution or whether or not this is just the current, right? And the cool part about the people I partner with, I'm always in the idea, I'm a visionary creator, right? For me, it's always, I want to do this. You can't do that. I'm like, can't isn't the word I'm looking for. How do we get to where we want to go? Even if we can't get exactly what I want out of it. Meaning I get that right now, though, AI can mimic my voice. We definitely can cartoonize myself. These are all things that are possible. It's just how do we put all the pieces together in the long run? But here's the other thing. It's going to cost a certain amount of money. So we need to create a level of ROI to make it make sense. Make sure the systems work. The data points are drawing everyone to the website. The things that we're trying to do are working before you start to spend the money that is required to get to that level. Right. And leading with revenue has not been one of my great strengths in life. I usually just try to pay my way to where I want to be versus lead with revenue. And I'm learning to follow a proper economic model in a lot of ways, because it's important that you lead with revenue. So as you do these things, make sure the systems work, checks and balances. When you see, like I said, we make the error, we forget to put my name on something that's going out across a different phone number. We're like, okay, so then we get the response. But like I said, I don't know if it was a bad thing not to tell everybody it was me. And then you get
Yeah.
this response. Who are you? Why are you messaging me?
Yeah.
Oh, it's me, Jordan, blah, blah, blah. And now you're in a communication. So
It's a constant iteration. That's like the thing. And I love that
yeah.
lead with revenue. It's easy. So for us, like we got into a point where it was like, all right, there's a solution for that. I'm going to throw some money at it. I'll throw some money at it. I'll throw some money at it. And then it's, no, that didn't really work. And then you have all these little piddly fees, things that are hitting up. So yeah, test it and then iterate. What is the AI deal that you have? Is it specific
It's
for realtors or what is it?
Yeah, so it's specific for a realtor. Her name's Madison, a-realty.ca. Just
Okay.
they paid today. I could send you exactly where it comes from, but basically her name's Madison. If you were to go to my website, she'll pop right up. So if you
Yeah,
go to
she popped up.
jordansylvester.com,
She's on
she'll
here right
pop
now.
up and you can talk to her and she'll start to ask questions. And so like some people only want to communicate via email. They don't want to give their phone number out yet. She'll stop asking and she'll just then send me the lead with just the email saying this is what the amount of information I could get. And so
If
she's
you
still in learning phase.
Yeah, yeah. Sorry to cut you. If you're
Yeah,
so I'm on it right now. It's Realty AI. So if you're
there you go.
listening to this, and we'll drop a link in the show notes as well if you're looking for something like that because it's here, it's happening. I don't know if you're using ChatGPT or anything else like that for any content that you're creating, but there's a number of
Mhm.
ways that you can go in and say, "Give me 30 days worth of content snippets about X, Y, and Z," and then it'll pop out 30 days worth of content, and then you say, "Give me 30 photos to go with each day," and then it can spit out photos. And so then now you have your 30 days worth of content and AI created all of it. So obviously, if you're listening to this, you might
Mhm.
want to read what it just spit out. That's pretty incredible what's going on now. So again, I love the process, love the way you're thinking about it and what you're doing. It's very similar, like just for this podcast alone, like we
Yep.
started going through and I had a team going and they were creating all the content that was going out and they were putting it on all the different platforms. And so what I was having trouble with or really figuring out was the conversion from the social media platform to either a customer or whatever. And so the conversation that I was having with my people was just build the audience. And then at some day, then you can actually do something with that audience. I was like, okay. So that's the approach. It seems like on social media platforms, it's just put yourself out there, be there. And it's almost for me like a modern day newsletter type deal. Okay, this is what's going on in my world. And it's a medium that I am happy doing rather than banging out a full written newsletter or something like that. So again, I'm always curious how other people are using it and what you're getting out of it. And so if you're in the early stages of it, then that's one of those things. It's never going to, the more you do it, the more it builds on itself. And so that's a benefit. So let's talk in the brokerage side of it. If you're not on social media, you're not doing some kind of social media, you're trying to build a brokerage business, then you're probably doing it wrong. Like you need to go where people are. And Facebook, like from people that I see on my Facebook feed that use it in a certain way, that's the only thing they really need. Like it has grown their business tremendously just through Facebook. So I don't know if that's still the case, but I'm not growing the brokerage side of my business. So it's really just, again, talking to you,
Yep.
figuring out what people are doing right now. So let's transition. Let's talk some investing. So it
Yep.
sounds like you were heavy into the investing side from the get-go, right? So when you first started with your dad, were you buying properties or were you working with investors who were buying the properties?
Correct. So I helped a lot of investors build a lot of wealth for about 10 years before I, of course, jumped in. I was a young dad at the time when I got into real estate. So I had a family.
Yeah.
And so what I know now, I believe lies when I was young, and that's fine. That happens to a lot of us. So I just didn't know what I didn't know. I looked at it as very risky. The culture around me said it was very risky because, again, I'm looking at it. I've got my kids, I've got my wife, and we're a young couple at the time. And I'm like, I don't know if I want to take on that risk. I'm already in a commission only business. So do I then want to like put my family at risk by buying these rentals and doing that? Now, in hindsight, absolutely there wasn't risk. Absolutely it would have been the right decision. I just didn't know what I know now. And so what happened was I was with Roy LePage up here and I moved over to Keller Williams in 18. So I switched brokerages. And it's not that I didn't think about investing. It's not even that I didn't keep one of my properties when I moved and I rented it out for a bit. And then I ended up selling it because I was annoyed with the tenants. And so I got back into this attitude, right? But for everybody else, they're making a bunch of money. It seems great for them. But for whatever reason, I wouldn't do it. And Gary literally says, he says, every great deal that your clients have is passed through your hand. He's not saying you should have taken those, but like you look at so much real estate and yet you yourself don't buy it. What's wrong with you is basically what it was. So I'm literally 3 months later, so that was in February. It was like May or June. I'm meeting with a client. We're ready to list this house. He's, yeah, if anyone wanted to buy it right now, I would take X and he'd take 100 grand for it. And I told him if we sell it, we list it, blah, blah, blah. Should sell for 120, 125 at the time. Right. It's a little 1-bedroom bungalow. So the first thing I do is I walk away. I call my one realtor friend who's got investors. I call my other realtor friend who's got investors, and I call a few of my investors, and I start to, push it out because I'm like, hey, this seems like a great deal. Anyone who wants it. And then that question goes, why, if I'm not going to buy this, I'm not going to buy anything. So that was the first step I took was, okay, I'll buy this. So I called one of my investors back, said, actually, it's not available without me. And I said, so what I would really like is to partner with you, and you can be the money guy and I'll take care of the management and run the deal. Cause I've already done that with a lot of my guys. Like a lot of them use me as their leverage piece to help get the deals done. Cause again, I sold it to them and then we'd flip it. I would support them through that, whether it was using guys that I knew or different things. I was always a resource. Yeah. So I was running a renovation company and business through being the connector, but never taking a piece. And that's where I shifted in and went, okay. So then we became partners. We got the asset. We were able to do that. The first person said no. The second person said yes, then made that deal. And from there built. So that was in 2019, bought the first one. Then I bought, I think 8 or 9 before. By 2024, I'd gone through 8 or 9 other projects. And then I went and partnered with one of my other buddies and we bought 7. The problem was we bought 7 between February 27th of 22 and April 15th. And then the market went, right? And so the issue was not only did the market go, so did everything else I held. So the problem was, is if you're thinking it from it, like I look at it, my wealth, my portfolio includes equity, right? So is everything I'm investing in. And when the equity falls out the floor on the investment side, so does it on the bank side. So does it on what I would consider to be my banked money, the money and things I've put in. And it's really funny because you think, oh, that makes sense. It does now. It didn't in my head at the time, because in my head, I never could foresee this level of collapse of the market to see that much fallout. So again, from the investment side, the advice I would give is when you do have things over here, don't use them as collateral for over here. Lead with revenue. This is now locked in. It doesn't matter what this is worth because it's not part of this world anymore. It's not to state that you shouldn't know that you have some security, but when this fell, didn't have the same value. So my ability to tap these things for what I thought I could disappeared. All of the money went with it, right? And so all of a sudden I'm standing there with these in trouble, and I no longer have access to the funds that I thought I would, right? Because the money wasn't cash, it was equity. Yeah. And so understanding how the money moves, how things happen. And so I got my PhD in how money works, right? Like I look at it and go, okay, I've learned. I now have an understanding. And so now I'm in the rebuild mode. And that's also why when I look at it, I got into flipping with buy. Instead of making my money on the buy, I was looking at probably what it would be like on the outside and created things that I would have done differently in hindsight if I followed my original models. But I got a little loosey-goosey with them because I had won so many times, didn't think I could really lose. The market was continuing to climb. There was no real thing. They were going to tick the market up from Canada's perspective by 1% by the end of 23. I didn't see that having a huge curve on the market, maybe stabilize it, but it wouldn't like cause it to fall off a cliff. But then they rose it basically 3% in 6 months. And that changed the whole world, right? For us. And I think it changed in the States too. As an investor, it takes a minute to basically get knocked on your rear end and go, okay, I'm standing here. So what today? And that's why when earlier I brought up, I'm talking with a lot of my friends and I'm like, you can control something much more readily, which is rent. Rents can be increased much more easily because you have market rent today and then you have this, and the rents don't move nearly as quickly as property values can, because basically the rents are predicated on the number of people willing to pay $2,000 to rent this property or $1,500 to rent this style of property. It's a fairly consistent thing, whereas housing has much more volatility in it. And so if I can buy a property that has old rents, I can renovate, refinance, and do all of that. And if I don't refinance or attempt to flip it, now I'm flipping it on cash value adjustment versus comparison adjustment, which is single family. If you're using comparisons, what is everything else selling for? When you're using cap rate, it's does this property fall into this cap rate or this cap rate? And as long as you know how that works, you can say the security level. Basically, the lower the cap, the more secure the asset would be to the new borrower, right? And whoever's going to buy it. So it has so if you have 4.5 cap building, that building is a very solid asset and if you have a 8 cap building, that building has a lot more risk or a lot more opportunity for vacancy and different things, right? So when you're looking at value.
So let's unpack that because I want to talk about it. So in the States, you can get a DSCR loan, which is a debt service coverage ratio loan. So all that means is you're getting a loan based on what the property is producing in income rather than your personal financial statement, right? So you're going to buy it, rehab it, refinance it, rent it out, right? And then you're going to be able to refinance it based on the rental rate. Correct. Whatever you're able to, so essentially the cap rate. So whatever income that property is producing divided by whatever the cap rate. So I get that. So what I don't necessarily agree with is a 4.5 cap is a more secure property than an 8 cap. To me, what it means is maybe the 8 cap is like a C class property. It's like in a worse neighborhood or something. Is that kind of what you're referring to, or is it?
So again, what I'm looking at it generally from anything when I've been selling, and I will admit, I do not play in this world enough to have a high level of knowledge. I'm really diving into it because when I look at this world you have more control over the information and how to adjust the value. In residential, you can renovate, right? So I know that if I put a bath in, we talked about that earlier, put the bath, put the wall, do this, but it still requires that the other properties in the neighborhood assess to that value. Whereas this is direct income. If I know that I can take the rents when they're at $1,000 and I can push them to 1,400 by spending 25 grand a unit to do that. Somebody's $400 is whatever. I'm like, yeah, but you don't realize what that is when you put it to the cap rate.
Sure.
See, because if your expenses stay relatively the same and all you do is create profit, when you recognize that is how it works against the cap rate, and the lower the cap rate, the greater exponential that is. And so again, what I've found with that, it is locational, it's turnover, it's level of vacancy. There's just different risks to the property that people look at versus something that's newer, turnkey, like constantly always going to be rented. So if I'm 2 blocks from the university versus 8 blocks from the university, you're going to have a different cap rate because one is all like absolute, it has more demand, more desire than this one. Yet both are still valuable. It's just understanding it's no different than normal real estate, understanding what cap rate should I expect from the other sales? What have the other sales been? And then you can build that model. And I find that because you're running on an economic model, more than you're running on a comparison model, you have a better chance of being able to move through it. It doesn't mean it's going to be worth the hold in the end, but somebody who is in a cash position who would buy these properties and not use any leverage, because that's sometimes what the investors will do. Now you're going to get a better return versus if the number of buyers might still be lower, but and again, you sit on it, it's producing a cash flow. So it's doing something greater and you're able to adjust for it. So it requires more capital, it requires more knowledge, it requires more information. You got to deal with the city. You can't there's a lot of things you got to do differently in these projects that you don't have to do in the single family, which is why I really like playing over there. But it's also a way where when you follow the rules, follow the models will produce a repeatable result. Whereas in single family right now, I think it's a more complex, the margins are so tight, it's harder to do the same thing. It's not to say you can't go back there one day. I just don't think this is the current climate for it in my market. Does that mean that in 6 months and the market's changed and all of a sudden, no, maybe we'll go back to flipping. Maybe that will be I think the worst mistake as an investor is you get stuck in one line of thinking and only that line of thinking is the best way, because if you're able to adapt to the current transactional market that you're in and adapt your business towards it and go, okay, this is the current best practice. And then realize when the rates drop and things change or there's this adjustment or this new policy that comes out and you adjust because you have the exchange. You can exchange. We can't exchange our capital gains. You guys can. So that's another thing that's really different between Canada and the US, right? We can't just push our capital gain into the future. We have to pay it every time we rotate, right? So every time we get taxed, we lose that capital for reinvestment. So there's just parts of that game where I like the modeling here. And it might be just because I got burned pretty heavily on this one. And I'm like, I want to go into something that I feel like I can see the numbers more clearly. I can understand the value more clearly because again, I can get crazy rent out of a duplex, but the bank's still looking at it in comparison to other duplexes. It doesn't care as much about the rent, at least in Canada.
Yeah. So what size? There are two things I want to talk about. One, what happened? Because I want to really drill into the deals that you did. But in general, what type of properties are you looking for now on this cap rate base? Are you talking about like 20
8
units?
plus units.
Okay. So
anything that gets me out of residential lending and into commercial lending, anything that puts me, because one of the things I'm learning is commercial lending in Canada is actually very much like the US. It doesn't follow the exact same rules. So who you know matters. They have a different way of underwriting for commercial than they do for residential. Because again, when you're playing on the residential side, that's everybody. That's the public. When you're playing on the commercial, you pay higher rates. You do to play over here. That's fine. But now you're in a situation where you can actually use the negotiations tactic. Like you just said, I can use the income from the property solely to refinance the whole property as long as there's enough equity and value there. And if there isn't, then I can always bring in a business partner. They have a lot less concern over the structure because if you do it in a corp or do different things, there's just different structures you can bring in on the corporate side that I couldn't do as easily on the residential side because they just didn't have the allocation within their rules of how they operate for it. And so when I play on this side, I get to, you pay a little more, you pay more in taxes, you pay more in these things, but these costs, so forever, why would I want to pay all those extra costs? Those costs are there, but when you build the product right, the model right, then the costs are just absorbed into the model And so it's not really extra cost. It's a mindset thing. It's no different
Yeah.
when you're renovating a house. As long as you account for all the closing costs, all the fees of a single family home, it's not any different on the building. You just need to account for the fees and make sure you know what to expect as far as these costs go. So if I can refinance my duplex and right now I'll get a 5.25% rate on the duplex, but on this 8 unit or 12 unit, I might be paying 6.25 or even 6.5. As long as the math works, what does it matter? It's not, those are the things I'm really starting to understand to be less right about. And I don't know how to say that right. I want to be less right and more model. It's less me and more reality, more of exactly what works for you and for everyone else. If I handed you this model and I just said, hey, you can go do this too, it's a model that works. It's not hyperbole. It's not an idea. It's just this systematic reality. So if you can find this person that gives you this lending, you can find this person that does this renovation at this cost, you can find this unit at this thing. And this is the thing. So whether it's an 8 unit or an 80 unit, the math stays the same.
Yeah.
The margins, you just are adjusting the margins based on the leverage and everything else, but everything in that world stays the same. Whereas every single family property, for the most part, I've done some that are pretty much identical. This 1.5 story and this 1.5 story are pretty much the same, but you're dealing with so many more property types, so many more things that you can run into. I think, again, on scale, these buildings you're able to go more deep, get more knowledge, and be able to control more of the information and the process in those places than you can on the other side. And when you get into actual commercial real estate, you as a landlord in Canada actually gain power, because if you're in residential, you get killed.
That's interesting.
Yeah, we have no power in I know in some of the states in the US, they have the same kind of tenant laws that we do in Ontario, but like some of the states, it's like the tenant doesn't pay you, they're out like 2 weeks. If you don't pay us, we might take us 9 months to a year to get you out as a
That's
residential
awful.
tenant.
Texas, we're the 2 week. You give them. So on the 3rd, if they haven't paid, I send notice to vacate on the 4th, and then if they don't, if I think it's 2 weeks after that, it's a full month from like getting the eviction notice to actually going to court to get the writ, and then you have to wait a couple. But it's relatively quick. Florida, not Florida, like California and New York, completely different. I think they just changed some of the laws in New York recently to help with that. But anyway, okay, so you're buying these houses. You're buying the houses. So because immediately what I think is, just like a bunch of fund managers, a bunch of hedge funds, these guys don't have to show the losses unless they mark to market. And so your properties still might be producing the same amount of income they otherwise would have, just the equity decreased. And so you're not going to realize that loss unless you sell, hence why a lot of people aren't selling. And is that what happened, or you had to sell because you had, okay.
We sold because the problem was by the time we hit refi. So here's this thing. So we're of course using other people's money. We're leveraging somewhere between 8 and 12% for most of the funds that we have at play. When you have 7 property, we basically leverage about $4 million in that moment. 1% on $4 million every month. That's a big turnover number. And without the ability to sell and make a profit on anything. So you're like, okay, so turn it over into cash flow. The issue is we're almost 44 grand. If we built the model out and looked at it, we're going to be at least 4 grand, and not just that 4 grand with just the leverage. And that's before we have to leave all the capital that we have invested. We can't get anything out because when we go to refinance, so the property, I'll give you one example. So this was on Beachdale. We had a property, we had picked it up for, I think 630, right around 630. We figured after renovation value would be right around 800. Give or take 775 to 800. We figured we were picking it up at 630. The clients knew at the time that it could sell between basically 670 and about 710 in its current condition. So we went in, we were going to do the rehab with the market push. And that the issue became, by the time we closed on it, renovated it, got it back, the appraisal came in at 635. The problem now is now we've got to leave. Now we didn't make any money realistically. Now the appraisal. So now I've got to find 100 grand or 120 grand to go 80-20 on this thing to keep it. So I got to keep 100 grand, $120,000, basically still at 1% per month. So $1,200 on top of this other money per property. So we're going to be underwater on the leverage piece for probably about another 400 grand across the 7. Which meant, so we have $4,000 a month, basically with the current payments and everything else that we weren't going to be able to adjust for, plus that. And so it just became if we get ourselves back, so we have the $4 million worth of leverage in the current economy and just reset these projects. Because one of the mistakes we made was I bought at 630. I didn't lose a single property that I bought under 300 grand. The only properties I really lost on were anything basically over, I think the cheapest one I bought that I lost on was 380,000. So everything that I bought below that. So I did buy 2 properties. I made money on 2 of the properties. 5 of them, one broke even, and the other 4 all got their asses handed to them. And so when you looked at that, it's okay. So what happened? I built in a 23% follower, meaning the market could drop 23% before we could really get hurt based on my modeling, right?
Yep.
The 3.5% interest rate, I built that in. It was just at 6.5% when I was trying to get these loans. And so that's where all of this cash flow broke, right? There was no way to, and the equity, like I just said, the equity had fallen so far that even when I went to refinance, there wasn't enough money in the property because I had to leave money in it. I definitely had enough capital to carry one of them. I didn't have
Yeah.
enough capital to carry all. And so you're just looking at this going, so I have to have maintained that extra capital leverage with my clients who now are not like those guys are now in a different leverage position because at this point they know they're buying an asset below market, like they're lending right now. They're going to be put in this other spot. So it just created this storm. And me and my business partner decided once we realized what had happened to liquidate so we could get back basically 3.6, 3.7
Mhm.
of our borrowing power again. The issue then became there were still other ramifications and other things that fell out from that. And then the market stagnated, real estate stagnated even for us. Like we dropped out 50% in sales and 30% in value. So my income, like in so many ways in a moment, I went from being able to generate this amount of money, was worth this amount of money, and all of these things to this is the new reality. And it took me about 2 years, a year and a half to really get myself through the first stage of what just went down and then figuring out how to do this social media and reinvent myself and come back. And that's where I am
Yeah.
now. And that's why who you're talking to today is a very different human than who you would have talked to 2 years ago. Now, that human did a lot of good. For 4 years, I made a lot of people a lot of money. We did a lot of cool things. We were able to do those 7 or 8, 9 transactions there. Then we were like, okay, so then I partnered with my buddy. He had 5 or 6 he had done. So then we came together. We were able to amplify. He has his crew, I have my crew. We can really start to grow. And we're not really worried about the market crashing per se. We figured the market would stabilize and then maybe even dip a little, but we have enough margin there that we're planning to make 50 to 80 grand on a lot of those deals. Instead, it went inverse on us and we basically lost 50 to 80 grand. And that happened within a 6-month window. And in real estate, the issue is the only thing I could have done was walk away from the deals. Like just say to the owners, no, I'm not going to buy and not close. The problem is a lot of those people were my clients. Like
Mhm.
these are people that when I went to their homes, they chose to sell to me for different reasons. I could give them flex closings. We would close, they could stay. We did all kinds of things to really benefit those certain clients in those certain circumstances. And so they were happy. We were happy at the time. But then we get to the point where this isn't even worth like we close on this, we're going to lose money. Now I didn't realize either how much, but I also still I'm a man of my word. I made my commitments and so I'm not going to put my clients or people that I care about into a bad position if I can avoid it. Now,
Yeah.
in the end, I put other people that I care about in a bad position anyway. So it wasn't like there was any winning in it. Learning from it was the game, right? Understanding where the big error was, which was in the hubris. It was in the moment where I didn't think I could lose. And I started to buy assets that were not within my normal buyer box, right? Within my normal
Mhm.
constant make. Because of the ones that, like I just said, the ones I did, I made 10 grand on one, I made 50 grand on the other. So those two worked because they were in the lower echelon because that was a more protected market. The higher echelon, the one that I paid at 630 was the worst. The one I bought 2 or 3 in the fours and then 1 or 2 in the higher threes there. So basically those all got hit heavy. Only
Yeah.
one of those I think made it out with any sort of skin left on it, where I think it was more break even. Out of 5 those deals, one of them went okay and the other 3 just all ate the
Yeah. Man.
thing. So
So thanks for sharing that because it's not all the time that somebody tells their war story and actually what
yeah.
has happened and what's going on. I will say that for me, I have had to repeat a mantra once in a while where it's just because you can doesn't mean you should. And
Mhm.
it's you had access to capital, you had the ability to buy these things. So anyway, what's the biggest takeaway that you have had from that experience?
So the biggest takeaway is listen better to your mentors, listen better to the people who have lived through things that you haven't seen. So I had one person. So there are the people who always say the sky is falling, and there's always people who say the sky never falls, right?
Yeah.
Those people, don't listen to any of them. They're all idiots. Why? Because they just stay on repeat and eventually it's like the clock, it's right twice a day.
Yeah.
So those are not the people I'm speaking to, but there was one guy and he was right probably 4 or 5 times. I just didn't like it. I didn't like what he was saying, even though he was proving to be right because he's been around for 30 years. He saw the 89, 90, 91, 92 issues, and he's from the GTA Toronto area. And he knew that what was coming. He will admit he did not see what was coming. But he said, take caution, take heed. This cannot be sustained. But he wasn't saying that in 18 and 19 and 20. He started to say it as we were coming out of COVID, as things were happening, and he's watching, he was giving this advice and I wasn't heeding it. I was like, I'm smart enough. I'm moving fast enough. It's not
Mm.
going to matter. If they raise it 1% in the year, even if it gets up to 4.5%, I'm probably okay. It's just, I didn't ever consider, there was no consideration that we were going to see interest rates hit, because in my mind, if interest rates hit where they did, the whole world would have collapsed. Now I was wrong. The world figured it out and continues to move on. So that would be that part where I know the world is going to figure it out. No matter what the governments do, people find a way. Like, we are very resilient humans. We figure things out. And so in that, it's okay. So listen to the mentors, listen to the people who are actually watching and then reading. And it doesn't mean you always have to agree with them, but give them more heed than they're just concerned because they're concerned. Watch their track record, watch when they say things, watch what happens next, follow along and have really solid people. The other big one for me is failure is learning. That is the, when you lose, you learn. If you don't lose, you probably, so I was very successful. And guess what happened? Got very prideful. Guess what else happened? That hubris built up. So I couldn't lose. Guess what happens? You fall off a cliff because you're not watching where you're going anymore. You're no longer looking down and checking your footing. And all of a sudden I walked right off a cliff and didn't know. And
Yeah.
then I'm falling down and you get hit, you get bumped, you get bruised. Now here's the thing, pick yourself back up, look up and be like, okay, that wasn't smart, and try again not to repeat in 3 to 5 years, because that's the other really bad habit I've had in my life. If I look at my life in stages, I see certain lessons that have been retaught, not exactly the same way, but like different in measure of where I was then to where I am now. And so I want to not ever do what I just did again. So it's remain humble, maintain humility, add really smart people around you, lean on their advice. You do not always have to listen to it because they're not always going to be right, but don't just brush it off as they're old and scared. Literally sit there and be like, but what if they're right? And Ray Dalio, which my coaches told me to really remember, he lost really heavy and now he just assumes he's going to be wrong. He still moves forward with integrity, but assumes everything he knows can change. Therefore, he could be wrong. And so when he's making the decision, he's not going in with this idea of, no, I'm right. This has worked. This is going to be consistent. It's going to be true. He goes, it might work. It might not. I just have to be prepared if it doesn't, and then
Yeah.
act in response without emotion to it. Because what happens is I was invested in not losing. I wanted so bad to make sure that I protected all my investors, protected. Like I spent most of my time just trying to protect everything around me, and it was already gone. I just didn't know it yet.
Yeah.
If I look back in time, I know where I stand today. I didn't know where I stood then until you get to the end and you're standing there going, this is what the bottom of the hill looks like.
Put your hiking boots on, man. Time to get
Yep.
back to it.
And that's it. And that's where I'm
yeah.
at now. And that's where the idea of going online from and switching into the transactional real estate model, looking at the cap rate models, really adjusting my entire perspective to, instead of being right, being willing to learn.
Yeah. That's
That
awesome,
would
man.
be the final point that overarcs it all. Instead of being right, be willing to learn.
Yeah. Solid. Again, ton of good points in there, man. I've loved the conversation. I hesitate to even add anything else to that because I love the way you just finished that off. But I would just want to ask, so going into these new types of transactions that you're doing, do you still have this mentor who gave you those points on the single family side that you can go back to? Because one thing that's happening in the States, I don't know if it's happening there, but we are seeing in our models, we're seeing negative rent growth, right? And so instead of modeling that we're going to get 3 or 4%, like back in 2020, 2021, it was 15 to 20% rent growth on an annualized basis. Insane. And people were underwriting to that and got crushed because not only did the rent growth stop, the interest rates went up, and now there's a ton of properties that are in trouble. So
Right.
The point is, again, do you have this mentor who you're running these models through and you're going and saying, look, this is my assumption that I'm going to be able to get $1,400 a month compared to $1,000, because that was the example that you gave earlier.
Yep.
Yeah. So anyway, I just get curious.
Yeah, so he is in my world. He's actually the broker owner of the brokerage. That's the person who's been around long enough. He trends the market, and because of where I was playing in this, I sit down and chat with him, and he's the one who said, because now I've been around the block once before with him, and when he first met me, when I joined, and then he's seen me go through 3 years, and then he's seen me go through another. He says, if you don't change, you'll be in the same spot in 3 years. You're gonna go. I'm a person who is really successful, and then it's almost like I hit a self-destruct button. right? It's almost like, again, whether that's whatever it is, something in me causes me to revert back down, which is a worth issue within myself. I've figured that out, which is cool because I'll be 40
Know
in July, and I
thyself.
finally
Yeah.
knowing that I have a worth issue, that I value other people much more highly than I value myself, but not in a healthy way. That's a
Yep.
different pride, right? It's a different pride issue. It's not a good one. It's just less, it looks better to the public because it looks like it looks like I'm being kind, but I'm doing it not for any of the right reasons. There's an issue internal, right? And so when I taught with him, he spoke to that. And so really right now, even with all the models and all of the systems that I am following, but these are models and systems that are working for other high level investors. As far as the market rents and the adjustments that the government policies are trying to accomplish, now before I do, let's say I was going to make this trigger happen, I would make the phone call to him and be like, hey, do you mind if I throw you by the spreadsheet just with the modeling? And is there anything that I should be variancing for that I'm not? Because like there are people who have 700 things in their variances, like the variance for 2% vacancy. It's this, they have 14 extra percentages they add. And there's other people who had 1 or 2, right?
Mm-hmm.
And I've always been the person who looks at it more as the gloss over. But I don't think you need all 14. But what of those ones that I'm missing should I be not in this current climate forgetting? Like you just said, should I be adding a higher level vacancy? Because right now we have no vacancy, 0. So I can't, like, I put 0.5 or whatever it is in just so that there's the turnover. But should that be 6% or should that be 3%? These are the arenas where I am leaning on experts. I advise anyone who's getting into investing, you don't need to go get a coach and pay someone. You literally just got to go find someone doing what you're doing and go ask them how they do it. And I promise you, if you just take them for coffee, you take them out and have a drink, they will love to tell you all about it. Because one of the things most people is this is why I did it. This is how I do it. We're very proud. And most of them will actually tell you, this is how I screwed up. This is where I made my mistakes. And that's the thing. You'll find that so many people who are investors and are doing this thing are really humble, and they've been humbled because they've been through it.
Yep.
And so if you want to learn from them, listen. And I would just say, listen with intention to learn, not intention that you're right. Again, this idea that I thought I was right. I've learned so much. I've been in business 16 years. Okay, sure, you've been in for 30, but what's the real difference, right? That was an attitude. What did it cost me? Pretty much everything. And so I will tell you, caution the attitude, always humble yourself. And be in a position of learning and questioning, but not without action. I will tell you, just stay in action, because if you stop, you're in trouble. So keep building the model, keep perfecting it, but remember to actually apply it, because if you don't, then what's the benefit of having, I have this beautiful model. Please go and do it, but use the resources and leverage around you.
Yeah. Awesome. Hey man, great information. It's awesome catching up.
Yeah.
This has been
Thanks,
great.
Randall.
So if you are looking for real estate in Ontario or anywhere up in that region, you should reach out to Jordan. All your contact info is going to be in the show notes, man, if that's all right.
Beautiful.
Jump on the website and reach out to him. Check out his AI bot, see how it interacts.
Yeah, please communicate. If you have any advice around that, we'd love to get feedback, because they're editing the bot. We're able to do things with it. We're refining, and the better it can be for other people, we'd love to have people play with it.
Yeah, that's awesome. All right, man. Again, great catching up. Catch you guys on the next episode.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.